Welcome to our presentation. Today we're going to discuss rental properties, the residential mortgage renewal, 5 mistakes that borrowers commonly make at the time of renewal. Welcome, and let's get started. A common assumption made amongst borrowers is that the lender will renew your mortgage. There are reasons why the mortgage may not be renewed. The lender may have changed their lending policy and no longer accept that type of a rental property. Or the lender may not lend in that geographic area anymore. Another assumption is that the lender will accept 100% of the rental income to be applied as income for getting approved for the mortgage. Generally speaking, lenders will accept 50% of the monthly income. And don't forget, this is income which is added to your regular income to qualify for the mortgage. Another assumption that borrowers make is that they assume the lender will consider your rental property mortgage application the same way as your principal residence. In fact, they are treated differently. Lenders look at rental properties differently because they are considered higher risk. The rental property is an investment, and there are many cost variables such as a high vacancy rate, disrepair of the property, the neighborhood has changed due to economic circumstances. So rental properties are in fact treated differently, and sometimes it's more difficult to qualify for a mortgage. Another assumption is that the lender will automatically renew the mortgage without qualifying the borrower. The process of getting a mortgage requires that the borrower be qualified and approved, and the lender will request income documents, a list of debts, a credit report, and an appraisal of the property. And in fact, because of the changing economic conditions where we find ourselves today in 2024, a lender may even reconfirm the income, the debts, the value of the property before they release the funds, before the closing date for you to get your mortgage, just to make sure that nothing has changed and everything has remained the same. Another assumption that borrowers make is that the property taxes does not affect their mortgage renewal. In fact, if the property taxes are not paid, chances are you will not get your mortgage approved. Some borrowers have the mortgage lender pay the property taxes. However, sometimes there are issues and the property taxes are not paid in a timely fashion. So when it comes to renew your mortgage, the property taxes have not been paid up to date. The resolution to that is for the borrower to pay up the taxes. And in fact, sometimes it's good for the borrower to check up with the lender or whoever is paying the taxes on your behalf to make sure that there are no surprises at the time of renewal and that the property taxes are being paid on a regular basis. Another assumption that borrowers make is that the rental property will be treated the same as their main residential property and will get a low interest rate. Rental properties are considered higher risk, and higher risk means higher interest rate. The way that you could try to get the best possible rate for your rental property is to reduce the loan amount in relation to the value of your property. This way, you might be able to get the best rate, and in this case, the the lowest rate possible. Don't forget that you have to show the lender that you're able to carry both properties. So you need to have a good steady income, low debts, and a property value which has increased in order to try and get the best possible rate for your rental property for the mortgage renewal. So what can you do? So here are some tips to make sure that you get the best possible rate for your mortgage renewal on your rental property. First, your debt should be low in relation to the appraised value of the property, what we call the loan to value ratio. Number two, take advantage of the prepayment option and pay down the principal of the mortgage. Paying down the principal of the mortgage also helps you pay less interest. Number three, if you are struggling to pay the monthly mortgage, then you can ask your lender to extend the amortization period. This will lower your payments and make them more affordable, but please keep in mind that you will be paying more interest. But in the short term, it will help you out enormously to get those mortgage payments lowered. Number four, with high interest rates today, it is best to renew your mortgage for 1 or 2 years. This way, should the interest rate drop, you can easily take advantage of that interest rate drop because you won't have to break the contract. Yes, a mortgage is a contract, and if you break it, you have to pay the penalty. Depending on whether you have a fixed rate mortgage or a variable rate mortgage, the penalty could be anywhere from $10,000 to $30,000 in penalties in order for you to be able to take advantage of that lower interest rate. But if you only had a 1 or 2 year mortgage, then there's nothing to break because you would wait till the end of that term to take advantage of the lower interest rate, saving yourself thousands of dollars. And number five, make sure that the property taxes are paid in full, up to date at the moment of renewal, and that you don't owe any income taxes to the Canada Revenue Agency. Any of those two types of debts will prevent you from getting a mortgage. So you want to be in the best possible position to qualify and get approved for your mortgage renewal. Thank you. At this time, I will take your questions. We have come to the end of our presentation, and I want to thank you again for joining us and allowing us to present to you the common mistakes that borrowers make at the time of renewal for their rental property. And we welcome your questions even after. We're here to support you and work with you to get your mortgage renewed. Thank you again, and have a wonderful day.